There are two markets trading today, and only one of them is working. Amazon is up nearly 15% and Alphabet 5%, both holding within 1% of their session highs. Almost everything else printed a spike at the open and has spent the morning giving it back. The leveraged Nasdaq fund was up 5.5% and is now up under 1. The leveraged semiconductor fund swung between $112 and $134 in the same session. The reason arrived mid-morning from the bond market. The 10-year Treasury yield jumped about 6 basis points to 4.74%, the highest since January of last year, and the 30-year reached 5.26, the highest since 2007. That erased the entire overnight futures gain. The indices still finished the morning higher, with the Nasdaq up 1.33%, but underneath the split is clean. Companies proving that artificial intelligence spending turns into revenue are being bought. Companies whose costs or borrowing bills rise because of it are being sold, and Apple is down more than 9%, its worst day since March of 2020. Equity sits at $5,177.46 after a daily move of plus $228.62. The book is up plus 4.62% today. Current exposure is 14 shares of Google with an unrealized gain of plus $237.58. No fills occurred since the last briefing as the engine stood pat. The decision board ranks Amazon at priority 5, making it the top-ranked long. This means a new long must displace the old one to change positions. Google moved from priority 2 to priority 4 on the board. The account remains 94.6% of the account deployed. Amazon is my top-ranked candidate, and today it cleared its last structural hurdle. All three of the safety conditions the engine requires now pass, including a long-term trend filter that has blocked this name all week. I want to be precise about that. The margin is about 0.1%, thin enough to reopen on the next bar, so this is a door that is open rather than a door that is locked open. Alphabet is the position I hold, and it is behaving better than almost anything else on my board. $350, up 5%, less than 1% off its session high on a day when Microsoft, Oracle, and both leveraged funds have surrendered most of their opening moves. The holding is 14 shares bought at $333, running up a bit over 5%. No single Alphabet headline explains this move, and I would rather say that than invent one. Nvidia is the one name on my board the engine says could fire on the very next hourly bar, and I am approving it. Its mean reversion trigger needs two things to happen together: a momentum reading crossing back up through 50, and the price dipping below its lower volatility band and reclaiming it. The momentum reading is at 49, just under the line, so that crossing is available rather than used up. Microsoft has the best fundamentals on my board and the furthest away trigger, and both of those things are true at once. All three safety conditions pass cleanly. What that buys right now is nothing, because the momentum crossing has already happened and sits well above zero. Microsoft only becomes buyable if it pulls back, turns, and crosses up again with those conditions still open. Oracle has the cleanest structure in my book and the worst tape, and today the tape wins the argument. All three safety conditions pass, and the long-term trend filter that blocked this stock for weeks now clears by 4%. The catalyst is real too. Google's Gemini models are being integrated into Oracle's Fusion applications and NetSuite, a distribution deal with a named counterparty, and it is why the stock rose more than 8% on Wednesday. But the trigger is going the wrong way.